All right, racket number 2. This one, Nicole. This one might scare you if you were in real estate.
Even if you weren't in real estate, if you participated in any real estating during
2004 to 2009, if you're familiar with what happened.
I didn't even know it was called the 40-year fixed mortgage.
The 40-year fixed rate mortgage
I thought it was called an interest only. I did the interest only.
Well,
I did the ridiculous interest only.
You had interest only on 30 years. You had it at 15. And then you had Fannie Mae back in the day in 2004 piloting a program for 40-year fixed. They started buying during those years 40-year fixed rate mortgages. Well, this mortgage is back.
It's back.
The non-bank mortgage lender says 40-year interest-only loans will help borrowers and investors who have been priced out of today's housing market. This is an Inman article, which we'll link up in the showing notes, as we always do. Non-bank mortgage lender NewRez is going back to the playbook from the last housing boom. So that playbook that didn't work too well in the last housing boom is back. It's rolling out a 40-year fixed rate mortgage. It says will help borrowers and investors who have been priced out of today's housing market, providing a lower monthly payment. You put more 10 years, lower payment. Okay, so these are non-qualified mortgages or non-QM, meaning it's not eligible for purchase or guarantee by mortgage giants Fannie Mae and Freddie Mac. So you typically will pay a higher rate even in these higher interest rate climates. The new offering is also including this interest only for the first 10 years, meaning homebuyers who use it to finance a purchase won't be required to pay down any loan principal for the first decade of owning the home.
That's how I got into my troubles.
You could tell your story if you want.
Nope. I feel great about it. I still own the home today, folks.
This is ideal for self-employed borrowers requiring the use of bank statements and or asset amortization. I was actually told by a lender that you can use like your top line revenue of the business as opposed to like what you're actually keeping. And so, all right, borrowers with an excellent credit score of 740 or above can borrow up to $3 million when putting 20% down. You could borrow with as little as a 660 credit score. That'll get you $1.5 million with 15% down. Or you could do at 680, $2 million with 20%. You can put as little down as 10%. Minimum down payment is 10% for up to $2 million.
Well, at least they're having people put some money down, because I did a double. I did a 2.
No money down.
No money down. I did 2
no
loans.
Income.
No income.
100-year loan.
So I had an 80-20 loan. I had one loan that was 20 because then I could do the other one at 80. That one I think I still have the full amount on that.
We talked about it early in the year. Sprout Mortgage, First Guarantee. They basically went out of business because they were doing a bunch of non-QMs and they couldn't get investors rather to buy these loans. Now the 40-year is back. I just want to hear from you, Nicole.
Yeah.
Is the 40-year a good product, or should it be a 30-year limit? Like our, a lot of people say about our politicians, like we should have term limits. You can't be like over 60 or 65.
Yeah.
Because you got, all these like 80-year-olds running the country.
Yeah.
Do you think like the mortgage should be capped at 30 years?
No, I mean, I'm not.
Dave Ramsey says it should be capped at 15. So what's your take?
No, I don't really have a take on how long, because I mean, you know me, I'm never leaving my house. Right. So I mean, whether it's 30-year, 40-year, 20-year, 50-year, like it's
would you sign up for a 50-year at your house?
Right now?
Anytime.
No, I wouldn't right now. No, I mean, I'm already years in, but maybe when I bought it. But so in this situation though, I mean, if the first 10 years is interest only, I would never participate in that event.
You're not against a 40-year, you're against interest only.
I'm against
interest only. What about for a sophisticated investor, interest only? A sophisticated investor who is...
How long are they keeping it for though? You're talking about an investor. Like, are they buying it to then sell it?
Maybe they have a 5-year plan. Maybe they have a flip plan. Maybe they have a whatever. Are there situations where interest only?
Never.
Okay, so Nicole's against interest only.
I got burned.
Okay.
Again, I was maybe 5. So when did I buy? I bought in 5. And then by 9, right? So
Yeah.
3 or 4 years later, they immediately were like, we got to get you out of this. Let's get you into, they put me in an arm. But then the amount of deferred, like I then added at least 20 grand onto, it was just
okay. So, so in the comments, chime in. What are your takes? Nicole's against interest only.
Yeah, a little bit.
How about a first-time home buyer, 40-year fixed? Would you, if it's fixed, not interest only, so 40-year fixed?
I don't know how old are they. Rate. Is this like your long-term
plan?
They're
the first-time home buyer.
You're buying a condo at a 40-year? I don't know.
Maybe they're buying their first, like, call it 10 to 20-year house. They're like, we're going to be here 10 to 20. Would you, and if they say, hey, we like this 40-year product because we're going to get a lower rate. Now, this is non-QM, by the way. This is not Fannie or Freddie Mac.
But it's not a lower rate. They're saying that it's a higher rate.
Okay, so you're right. Let's say higher rate, non-QM.
A lower, it would be a lower payment because it's longer. Not
Fannie Mae, not Freddie Mac. What are you telling to your first-time home buyer? Saying run? Go get a Fannie or Freddie?
Oh my God, it makes me so scared.
What's your advice?
Yeah, not with a first-time home buyer. I would probably push it towards the investor before I'd be pushing it towards an actual first-time home buyer.
I agree with you.
Yeah.
If I'm educating a first-time home buyer, I want them to be in a government-backed loan if they're taking out a mortgage. I want them to have Fannie Mae, Freddie Mac, guaranteeing the mortgage.
Because they're now going this route because they can't afford the monthly payment. Shit, man. What if something happens to somebody?
I would never want them to be in a bank that goes under and then they're getting called on their loan somehow.
No
I mean, what first-time home buyer is reading all the mortgage documents?
They're not.
Nobody is. Maybe one buyer every year.
Of course. Yeah, I want to pay $300 on my mortgage. Let's do that.
Let's do it.
Yeah, I should have kept that one, though.
Now, I'm not against the 40-year fixed rate, though, in situations where you have a savvy buyer. They've probably done some transactions before.
They've read the fine print.
They're self-employed. They're a business operator. She knows what she's doing, or he's been in the game before. I'm not against it, and I'm also not against interest only in the right situation.
In the right situation,
there's people buying 400, 500 unit buildings, 200 unit buildings, multifamily, and they're doing 2-year interest only. Now, do you feel bad for this person if they go under? No, they're a business operator. They've done it before. They own thousands of units. And when you don't want to plan to refi, but they know they're making capital improvements to the property, and they're gonna refi it, and they've done it before, right? And so this isn't. These products are not for the first-time home, the person that wants a home for them and their family. I would still push them into the 30-year fixed, government-backed.
Let's
Fannie,
get you
Freddie.
something you can afford.
Absolutely,
and something that you like.
And in reality, for them to save the most money long term, you go Dave Ramsey on them and you get them the 15-year, right?
Wow.
You put them in the 15-year product if they can afford that payment.
If
they love the payment. If they love the house, love the location, love the payment. All right. So overall, the 40 years a racket.
Wait a minute. I'm up, right? I'm up.
You're up. Left, middle, right. I'm saying it's not a racket. You're saying you kind of say it is a racket.
I'm saying it makes my heart beat a little faster.
All right. Hey guys, appreciate you checking out this episode of The Real Word. If you want the full episode, go over to the Broke Agent YouTube. That's where we're hosting the full podcast. If you want to continue to see the segments broken out and the short clips, stay right here on The Real Word YouTube.